Good day. Our previous video was on partnership. So today we are going to be discussing on joint venture. So when talking of joint venture is, let's say we have a joint and venture. Joint means something combined. That is combined. It is done together. While venture means business. So that is, we have this joint venture is a business that exists between two or more parties, whereby the parties are called co-venturers, and their whole aim is just to meet a particular aim. I mean, a particular objective. So the objective is what is just to make profit, and after that profit, the business is what is going to what they are going to go on their own separate way. For example, we have a business A and what business B. So business A is into t-shirt business. So they are selling what? T-shirt. While business B also is what? Is selling t-shirt. So now business B name is what? Is designer. While business A is what? Fashion. So in this case, this business can what? Can come together in order to what? To meet a particular target. I mean a temporal target. Now, for example, now we have another business. Let's say, for example, we have what? ICANN as what? As a professional institution. Now, this ICANN now, maybe for example, now they want to do event, or let's say, okay, they want to do event, and they need t-shirt to carry on the event, and they need like a t-shirt cost 50 million naira. Now, so they meet with A to liaise with them so that they can what? If A can supply them t-shirt that cost 50 million naira, and A has only 25 million naira in his what? In his capital, as capital, and business A can what? Can meet with what? With business B. They can liaise with business B so that what? Let's say business E also what? Has 25 million naira. So business A can meet business B so that what? They can come together, they can put their capital together to meet up with what? With that target. And after that target, the business is going to what? Come to an end, because it is what? Let me say this joint venture account is a temporal partnership. So the parties that is involved, they are what we call what? Co-venturers. So we have what? Co-venturers. They are parties involved. Now, after this, so whatever after supplying ICANN, the t-shirt costs 50 million naira. So the profit that they are going to make, which what will be allocated to the co-venturers. So after that business, after sharing the profit, the business is going to come to an end. So each of them what will go to their separate way. So that is what we mean by what? Joint venture. So also we are going to discuss on the differences between, that is, joint ventures versus partnership. Now we have joint venture. One of the basis, we have what? Nature as a basis. Under joint venture account, it comes to an end after particular venture. That is, after they already meet with their target, that business what? They will go on their separate way. And under partnership, it is continuous. It is continuous. No, now number two, we have what? Name of entity. Now the name of entity now under joint venture account, we have what? They don't have name. Under joint venture account, they don't have name, because the business will just what? Come together, and what? They will meet the target, which is what? Which is the profit. After making the profit, the business will go on their way. So now we have this under joint venture, they don't have name, but in partnership, it has what? Distinct firm's name. That is, they have what? A particular name. They are going to what? Name the business. So we also have what? The parties to what? The parties to joint venture, we have what? They call them co-venturers. While the parties to what? To partnership, they call it partners. So we also have what? Governing act. Under joint venture, they don't have a specific act, but under partnership in Nigeria, we have a Partnership Act 1890. So, and also we have a duration also. Duration now, in joint venture account, we have a duration is between 1 to 2 years. So that's for what? For joint venture account. It doesn't last more than 2 years. It's within 1 year to 2 years. Under partnership, we have 20 to 30 years. It can last for even more than 30 years. So we have what? Liability. liability under joint venture account is limited because their own aim is just to meet a particular target, which is a profit, and after the profit, they will share the profit among the co-venturers, and each of them will go on their way. So now we are under partnership. We have unlimited partners. Unlimited partnership. That is, this unlimited partnership, that is the business, the parties that is involved in partnership business, they can make as many as they want. They can make liability as many as they want. They have unlimited liability. So we have membership, that is members involved in joint venture. We have the minimum is 2, while in partnership we have the minimum also is 2. Now in joint venture, one of the difference between joint venture account and partnership is that the maximum in joint venture, joint venture does not have a maximum limit. They don't have a maximum limit, but the minimum is 2, while partnership now, they have 10. In banking, under banking sector, we have maximum of 10 members. Now on other one, we have 20 in others. You understand? So the next one, we have closure of the business. We have the business come to an end automatically after the completion of the venture. Now under this, once they've already meet up with their liability, the profit, after the profit has been shared, the next thing is the business, the co-venture we have to go on their way. They will continue their own business in a separate way. But in partnership, it is dissolved by mutual agreement between the partners. Now in this one, the partners are the one that will agree whether the business is to be dissolved or the business is to continue. So the difference is that in joint venture, the business is automatically, it is automatically comes to an end, while in partnership, the business does not come to an end. So we have the method of accounting treatment. We have 3 methods of accounting treatment. The first one, we have the separate set of books. The second, we have in the book of each co-venturers, and also the next one, which is memorandum method. Now these are the 3 methods that we use in preparing joint venture account. So now under the separate set of books, we have joint venture account. This joint venture account is a nominal account. It's just like your trading profit and loss account. So whereby you debit all the expenses and credit all income. This one is similar to trading profit or loss account. So we have co-venturers account. This also is the same thing as as capital account. That's partners capital account. That is this one is the same to that. So we also have joint ventures, joint bank account. These are the 3 accounts you're going to prepare under separate set of books. So the next one we have is in the book of each co-venturers. Like I said, that joint ventures account is similar to trading profit or loss account, which is our nominal account. So that's for the joint ventures account. So and other venturers account, that is the ventures that are involved in the account. So the next one we have memorandum account. So we have memorandum of account, and also we have a joint venture with joint venture with co-venturers account. So that's for that. So in the next video we are going to just stay tuned. In the next video we are going to be solving question on joint venture account. Thank you.